Hello, everyone. First of all, wishing you a very, very happy Independence Day. This is a special day, and we have organized a special webinar, and we have special guest, Mr. Samir Arora, with us. To begin with, I would just, like to remember last 75 years of India's history. I was reading day before yesterday a few articles, and I could gather that all of us as students, all of us as knowledge seekers, have always studied and known that India was a sone ki chidiya. 75 years ago, when India was kind of left looted with, I think, more than 45 trillion in terms of wealth. India was left in poverty, India was left in hunger, and India was left in illiteracy. In 1947, when we got independence, our per capita GDP was around $2.9. India's, in those days, India's position in world order was 142nd. Last 75 years, India has done a lot. We have done a lot in terms of economic growth. It started off with green revolution, which led to the rise in food production. Today, India does food exports. We saw white revolution, which was milk production. We saw blue revolution, which was kind of promoting fishery farming. And then after that, we saw the era of liberalization, privatization, globalization, and now in the recent past, digitalization. So we have come long way. Last 75 years of history has actually now again brought back India to the fifth position in the world. In the world order, today India stands at fifth position in terms of GDP, which is around 3.3 trillion in USD. US is number one. Then after US, it is China. Then after China, it is Japan,
Japan.
and then after Japan, it is Germany, and then it is India. And India and UK were, I think, alike, but India has recently taken over. So, from here onwards, so I would want to kind of start this discussion because we have kept the topic of this webinar as knowledge seekers in trying to understand that is India really now at present standing at the cusp of a bigger breakout over next say 10 years or over say next 25 years. Do we see possibility of India being at number one position when we'll be celebrating 100th Independence Day? These are the broad two areas, and if we aim to reach there, what is it that we need to do? What is it that we are already doing? These are some of the I would say broad aspects that we'll be covering today. But before we begin, I think yesterday a very sad news came where we understood that Mr. Rakesh Jhunjhunwala is no more. So, before we kind of begin, I would want to hear from you, Samir, because, you guys are in the same industry, and Rakesh ji is a very, very, revered personality, a self-made investor. We would have learned a lot from him. So what are your, how do you remember him, and what do you want to say about him?
Thank you very much, Kamal. So, on Rakesh, I knew him on and off for 25 years, on and off in the sense that I can't call him a friend where I'm just talking to him all the time. But I would go and meet him once a year or sometimes twice a year and on the phone, maybe every 4-6 months. Sometimes he would initiate the call also if he didn't like my interviews on TV where I was not liking some sectors and all. But generally, from the very beginning, I remember in 1998 when I came to Singapore, at that time, he used to talk about McDowell being some, I think, 200 crore company, and how can India with such a big country have such a small market cap for these companies. Then later on we discussed Delta, and we discussed Titan, and we discussed Yes Bank, many things we discussed over time. But if I look at it and say what was his big picture contribution to India, I think his biggest contribution is the influence on the market in terms of retail investors, because the retail investors can't get impressed with institutional money because they feel, oh, these guys have 20 handlers, they have this, that, and anyway, they are managing somebody else's money. And they don't consider them literally as role models. A real role model for everybody in the first round is somebody who was like them, maybe a little ahead, little behind, but who then did well in the market, avoided the big controversies, didn't get any bad name for anything, and generally in front of you in a public, transparent way, knowing broadly what he did, what stocks he bought, where he did badly, that he created this wealth. I think his wealth creation is actually of the same level, not in terms of absolute amount like Warren Buffett, but that is because Warren Buffett for 20 years was actually a hedge fund manager. And so there what happens is your initial corpus gets created. So if you look at Warren Buffett and say that if he had started with $10,000 or whatever he had in the beginning, and he made this exact return for whatever 50, 60 years, he would come nowhere near 150 or 180 billion, even if you include what all he's donated, because those returns would not have come purely by starting with 10,000. It came because he, for many years, basically earned a lot of performance fee. Whereas Rakesh Jhunjhunwala has done it like an individual retail investor in theory he could have done. But you can also see that all the guys who were around him, other than maybe Radhakrishnan Damani, all these guys were together. They all were there for 35 years. But we broadly know the difference in wealth even within that group of people who were literally at the same level. So that has to do with risk taking also. It can't be done because nearly all of them, all these, I don't want to give the other guys names because they're all successful, but not as successful as Rakesh Jhunjhunwala. And the second thing is for him to openly discuss everything with everybody. I mean, in the beginning we were zeros, even now compared to him we are zeros. But in terms of his willingness to even fight an idea with you, why does he need to fight an idea? Because he was into it every minute. And that is a great thing about him, that he was approachable. You could say to him, no, I disagree with you on this. And next time you will again start from zero and talk about something else and not say, I am a $6 billion guy. How dare you, not acknowledge every... It's a great guy. Very bad thing that has happened, because also very recently, when he came on CNBC about a week ago, although he looked very weak, but on the other hand, I thought, because I had WhatsApped him about 2-3 weeks ago and he just, said like a Jay kind of thing. I was wishing him. But that day I thought that maybe he's becoming a little bit better. So he's coming back, and although the voice is bad and even the weakness was there, but the fact that he had come back after maybe whatever X number of months, the thing was that maybe now he's getting better, and then this thing happened. So it's pretty sad for everybody, I think. I mean, there is no... And you can see it also in the praise he's got. Very few very rich people get that kind of, good things written about them from everybody, from prime minister to the corporates to individuals to whoever. So that is also a big achievement.
Absolutely. And we will always remember him as perennial bull. You rightly mentioned, who kind of taught the ultimate retail investors to be bullish about India and to be bullish about equities and asset class.
Correct.
So moving on to the topic that we have kept for today's discussion, at 75th year of India's independence, how do you see last 75 years? Let's first in the first part cover what do you see is the biggest achievement, or maybe 2-3 biggest achievements that you want to talk about?
So first thing is that if I see big picture 75 years, which I have not seen, but I've seen 30 years of actual market. But 75 years, if you look at it like that, then it has to be what you said, that we started from near zero and we were not even expected to survive as a country, I would say, because not only were all these disjointed states, and they had really never been united before in that sense, except to fight the British, and to have all these different languages, different this thing, no education or very less education, no way. How did they even communicate to everybody that we are one country and therefore on big issues we have to work together, whatever? These were big achievements. And after that, of course, I have been a product of some of the successes of India, which basically how IIT started, IIM started, and then, the space programs and everything else. So I think at the first level is to have reached this stage. Maybe cricket played a bigger role than anything else, that everybody at that time thought that we were one country. And at one stage, I would have said Bollywood, but now I realize only these North Indian guys like us think that Bollywood was uniting India, maybe half of us were not even having that as a common factor. But generally, to have survived and done so well is itself. But if I look at the last 30 years, where I have seen it literally, every day, and the reforms that have also, that is the real acceleration of why we are at number 5. So in the 90s, and by the way, I by chance I started working on June 1, 1991 in New York, and the Indian reform started in July 1991. So as a professional, I've been observing throughout. So the first round of reforms, which were to do with liberalization, which basically meant that you give up all these controls that the government had on corporate, that you have MRTP and you can't expand and you can't pay higher than this amount to your CEO, and you can't import technology or you can't pay royalty, and all those things were slowly removed. And then you did some globalization in the sense that, okay, now the protection is being removed, and therefore, you have to compete and you can get technology and partners. And then you did privatization, which in India was by privatizing sectors and not companies. So we opened like mutual fund business to private sector, didn't have to privatize UTI. Or we opened up the media sector to private, but didn't do anything with Doordarshan or airlines or whatever. So that these things helped a lot in the first 10 years. And then we have had these new reforms on top of those reforms, which are related to reducing corruption and doing digitalization and this GST and doing one common area. These are all big picture things. And the next round we need, which is to do with now improving per capita numbers. But at a gross numbers, we have done way beyond anybody would have thought, I think.
Sure. So, I actually started understanding about India's economy, I would say, in early 2000 when I was doing my honors in economics. And I remember in those days, we used to boast, feeling that India is the only country which is growing at 8%. But later I discovered that, there were many countries in that period, I think more than 30, 40 countries, because world was growing at around 8%. But
no, world was not growing at 8, but all these tiger countries, no, not world was never growing.
No, not because world was growing at a higher rate
at
than
high
today.
rate, maybe 4.
And there were many countries, not only India. But in current context, if we say that we are growing at 7 to 8%, or we are projected to grow at 7 to 8%, I think there are hardly any countries which are going to grow at 7 to 8% over say next 5 years or 10 years. So obviously in this regards, there is a great possibility of India now inching up even higher from the 5th rank. But in this context, what are your estimates in terms of the realistic numbers in terms of GDP growth? Because if world is kind of not growing as much as it used to maybe 20 years ago, obviously that will impact India's growth also. And at the same time, we see that over the last 5 years, domestically in Indian context, there is a lot of growth which has come back. So what are your estimates in terms of India being after say 10 years?
So big picture, if we look at the 4 countries ahead of us, in 10 years, you can easily get to third. All you have to do is grow at 7.5%, and Japan mostly, I think, grows at 2%, and maybe Germany grows at 2.5%. So 10 years, you can be third in absolute GDP. But the first 2 are quite ahead. So in 25 years, also if I do big picture, I just did it because I knew you might ask some questions like this, that if I do 7.5% for 25 years, it's basically 6 times. It's 6, okay? So if India's GDP is 3, let's say, so it becomes 18. And China is today like nearly 15. And USA is today 2021. So you can't at 7.5% become second or first. Now we can change it around to say, let's do it on purchasing price parity, because India actually, first of all, let's look at India. The GDP is understated. Our women work at home. Sorry, nothing added to GDP. If they all went and worked in one place and then they hired somebody else to work at home, the GDP will go up many fold, because first their salary will be counted and then the other will be counted and will be all value creation without really any change in what the current otherwise situation might be. But if you say that let's do it on purchasing price parity, then India is already third, where China is number one, US remains at what it is, and India is third. And there now, let's say from there you grow at 7.5%. Now you can be in running, but then you have to assume that China will grow only 3-4% per annum. So broadly speaking, realistically, we are going to be third according to me. And third is not bad in any way. Even if we are second, we might be on this PPP because US could be behind on PPP. But today we should not think just because we want to be this thing, because ultimately we have to take actions of this. Unless you say because of this we are motivated to do 9% per annum or something. But realistically, if we are talking more as us as investors and making realistic assumptions, second or third is good. And it is very good actually. Why do we think that we have to be absolute first? Because that is a bit unrealistic because of the difference. But second or third is equally good. And on PPT, it might be second.
So I have always wondered, till 1990s, as per data, India and China used to be similar in terms of, economic
Correct.
growth, in terms of per capita income. But today the gap is massive, and we are saying that it is difficult to even cover this gap over next 10 years. So what is it that China did after 1990s? Because if economic reform started in India also after
No,
1990s.
they started in 78.
Okay.
They started their reforms in 78. So there are many, I used to use this in the past, that if you were to shift India by 15 years, because let's say India started in 92, 93, technically it started in 91, but I mean, just as a number, or you can say 13 years. And if you shifted it by 13 years, India is doing well. The only thing is that at a time when China did these 9% type numbers, now you can say whatever be the reasons, we didn't do 9% for this long. Nah? We have done in the sevens if you take the whole period. And because maybe democracy, maybe because we are more this thing, we can't be just forced into doing things, blah, 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 whatever. Or generally that China initially had maybe more support from US, whatever. I think India's thing is that today, even though China is at 15, today China is already appears to be a threat to other countries. And therefore, they will not support it as much. India is not viewed as a threat. India is viewed as a nice guy, even can get away with saying, can I import some oil from Russia? They say, okay, do it. Don't bother. Don't show us too much. Just do it, because India is not overly viewed by everybody, even people who are small, I mean, countries that are small, because India otherwise is a sort of a nice country and doesn't have geographical expansion plans and, dominating the world plans. So India will get more support because you need support of the world for everything. Now, every day, China will be, I think, seen as a threat, and therefore they will not be easily accepted by the rest of the world. But in general, China was 13, 15 years ahead. And those are the lessons that we are doing, that they improved infrastructure, that they emphasized exports, that they made, this ease of doing business, blah, blah, blah. And that is what is sort of India's game plan also. It is just that today, because the world is not growing as much, whether because of COVID or debt or whatever, that becomes a little bit more difficult. And also, if now you want to export, that fellow has already exported, so he's already taken over. Now you have to take from him. Previously, it's like RIT. Initially, RIT was not competing with anything. It was just a brilliant thing for the US and other companies to take because it was cheaper, much cheaper. Now there might be 10 other angles, because so much has happened that now on the margin, the large part or small part of the growth is already done, and now somebody may evaluate that is it better to do a little bit in USA or completely outsource to India, whatever. So it's the same thing with thing that initially you can do those things without anybody else thinking that you are a threat to them. But otherwise, India is not otherwise too far behind if we just shift the scale by 13, 15 years.
Sure. So to project, what are the sectors, what are the businesses which now onwards will actually, participate more in terms of wealth creation. If we were to anticipate what are the kind of reforms that now India's economy should do or would do, because when we say that we are in fifth in terms of world order, it obviously it gives very good feeling being an Indian. However, when one travels abroad, one feels that there is a lot which is needed in Indian context in terms of infrastructure development, in terms of cleanliness, in terms of maybe living standards.
Pollution.
So in my opinion, I think over next 10 years we would see some of such reforms, which would ultimately increase the lifestyle, and maybe increase the living standards. What are your views in this regards, and how should one use the expected reforms over next 10 years or maybe next 15 years to build wealth?
So some of these may not be called reforms. They may just be called, now when you become, for simple big picture first. So India's GDP per head is $2,000, let's say. Actually, it is $2,000, mota mati. So $2,000, if we say that we are growing 7.5% per annum, which I think is, okay, you can make it 8, whatever, doesn't matter. And therefore, per capita, it will grow, let's say 6.5%, because 1.5% the population increase ho jayega. So simple again, do 6% for 25 years, it will become something like 4x or something. Okay, that means your 2,000 will become 8,000. Now, during this period, your consumption of basic things, which is keep food and rent, that is not going to increase that proportionately. And that is why everybody says that this is the consumer takeoff stage and stuff like that. When you reach 4,000, you will buy more AC. When you're 8,000, you will buy more travel or whatever. But from a reform point of view, the reforms so far were very easy to play. The first round of reforms were that the old guys are being hit because the protection for them was, say, 100% duty, and the government said that over the next 10 years, it will become Asian level or ASEAN level duties, which is some 15%. So you broadly knew that this fellow's product is today protected by 100% duty, next will become 80, then 60, and then in every budget, why the budget was important, was who will be hit and who will be helped by not having his duty fall as much, his customs duty on his end product. And so you just avoid all of them, which is why I did so well in 90s. We said we are not buying any of the old guys of that time, because every year they are fighting just to remain in place. And then they allowed these new private guys to come in. So you buy the new private guys and they will compete with the government. It was very easy. Then the second round of reforms were also a little bit easy, because there it was more to do with that financialization, that you will have bank accounts, that you will have less black money, that you will have, so you broadly feel that the financial sector will do well. Now, I think if I do big picture, which I don't do, I mean, I talk a lot big picture, but you can't pin down stocks like that, is that it has to be consumer quality of life kind of stocks. Although many of these things, like, let's say we say that India will concentrate on reducing pollution. Ab iska ye nahi samajh aata, what do we buy for that? And if you say we will travel a lot, okay, we can buy some hotel stock, big deal. We already have, right? What I mean is, so some of these don't literally translate in 1 minute into a stock. But thematically, if you say, if people are richer, are they going to buy more bank accounts? No. But they may buy more asset management services. But asset management services are being attacked by computer and indexation and ETF. So you say, sorry, chalo. Then will you buy some broking accounts? Yeah, but there is no, anybody can open account with anybody and it doesn't have any great this thing. And so what else will they do? It's basically consumer, I think, is the theme. But from government point of view, it is that beyond a point, they will have to just match our infra needs, I think, in a big picture sense. Because if you have to grow in all these things, you need non-stop power, you need better road, you need airport, you need all this. All of this may not directly mean a stock for you. It is just that this is how it is. And if they don't do it, then we cannot grow even at 7.5. But if they do it, doesn't mean that those stocks are going to do well, because those stocks are, some are private, some are bidding type projects where you don't know who's going to win the next bid, or some of them are just capital intensive. Some of them have, things which as business you may not like, but somebody has to do it and they are doing it.
So
So themes in the big picture, if you look at today, what is the US themes? Now US is some 50 years ahead of us or whatever. वही तीन theme होती हैं. People buy consumer companies, they buy IT or tech companies, and they buy financial companies, and once in a while where there's something else. So that way nothing changes. You just remain in, because these are the three themes of the world at any point in life.
Sure. So of late, we have also seen, as we are saying, that India has attained fifth largest position. Obviously, the countries which have lost position, or as we are, moving ahead, it is kind of definitely, making US, China, Japan, some of these countries, Germany, relatively insecure. Now, from that context, we do see that from globalization, they have started to talk about deglobalization, in the sense that kind of they feel that globalization is helping more the emerging part of the world.
Emerging, correct.
So how is this feeling, or how is this kind of going to be a risk, or maybe a challenge, or maybe a potential for better return over next 10 years?
This is a tough one, but actually, I think, as I was saying, it is important that we be viewed as being the friendly guys and who are not threatening anybody, other than maybe China a little bit. So, one way you could say that why are they feeling that globalization is bad is because of COVID, also, number one. Because they realized that they were too much dependent on a single country, on the supply chain of a single country. And now, even if their store is open, the material from China is not coming because China has shut down this thing. Second is that US and China are viewed more as head to head, not just competitors in economy, but sort of nearly enemies. And therefore, many of them may feel that from a risk distinct point of view, that once having seen that your supply chain was the cheapest when you got things from China, but it was not the most robust. It did not take care of the fact that there might be an issue in China, or there might be a US China, like when Trump came and he put duties and all. So from that angle, India is supposed to be a beneficiary, which is what we are all playing, saying China plus one, both from a customer point of view, that he wants a little bit of non-China. Currently, he goes to Vietnam and then he goes Bangladesh for textile. But if India positions itself, we have this PLI scheme, we have a lower tax rate for new companies, 15%, or there is a protection that if you import these mobile phones and all these electronics from wherever, you pay 20%. So because of whatever, and also because we have a local market, but primarily because the globalization is viewed badly, but globalization with basically one country is a high risk, this thing. So that relative thing where India can benefit, absolutely. I think overall, like in semiconductor, US wants to have investments in US. Some of these sensitive things they may want, but the whole thing of arbitraging labor costs and cheap costs cannot easily go away. But you may choose some certain sensitive sectors and say, no, these things should not be done, because in a war, what if they block us, we block them, kind of thing. So isliye we have that relative advantage that the reason for this sentiment is actually, according to me, China. It's not, I don't think anybody is feeling worried that, oh, we gave our IT to India, this is a big threat to us in the US. So let's hope that we can, go
Right.
through that gap.
Right. So, one of your friend, Mr. Ramdev ji, had projected, I think in the 6-7 months ago, that by 2030, there is a great possibility of Sensex reaching 2 lakh. And, those videos, those statements got viral. So now, in the second part of this discussion, let us kind of anticipate by 2030, where do you see, India's economy in terms of GDP, or maybe Sensex? If you had to project, obviously you are a mathematical mind, very wise mind, very experienced, one of the most experienced fund managers. So your words are definitely words of wisdom.
No. So इसमें क्या होता है कि number just dramatize करता है. मैं अभी calculator से कर लेता हूँ. I will say 14% per annum. 8 साल 1.14 to the power of 8. अब मुझे पता नहीं कितना निकलेगा. Multiply by today's index, which is 60,000. उसको round up, round down करके neat number बना दो. But whatever it comes to, let us say now I want to dramatize it. because Ramdev has said 2 lakhs, but I like to say 5 lakhs. तो मैं उतने साल बढ़ा दूंगा, but compounding 14% का assume करूंगा मैं. Why? Because broadly speaking, I mean, it can be 12 or it can be 14, but broadly longer term returns would be in this range for the market. We are not talking about good fund managers, but we're talking about the market, that broadly speaking, the market returns are related to interest rates plus an equity risk premium, number one. So if India 10-year is at say 7.5, अब आगे पीछे क्या होगा? But today the best estimate would be that you can make some 6% more, which is called the equity risk premium, in a annualized return for a longer period, not next year कितना बनेगा. But therefore we say every year हाँ ये 40% के करीब बनता है. It also ties in with GDP in nominal terms. That 7.5, 8% GDP growth and add 4-5% inflation. So that is the nominal growth rate of the country. And then you can say corporate sector is a little better, or the non-agricultural growth is a little better, this and that. वो घूम फिर के 15-14% बनता है. So I have not done it, but you can tell me which number you want, and I can make a projection who kitna bhi off ho end mein, who knows. But it will today look like a very fair this thing and not a wild thing. All I have to do is play with the number of years.
So basically, your realistic estimate for GDP is 7.5%, and
Yeah,
for broader indices around 14%.
Yeah, 30. Why? Also, last 25 years, you see, it's around this range. If you look at the US market for the last 20, 50 years, basically you'll get 8-9% in dollar terms. So broadly speaking, यही होता है ना, और कितना होगा? 20% per annum at an index level. See, simple. Warren Buffett, he's famous because his returns have been 20% per annum for whatever. If the market had gone up 20% per annum during this period, you think anybody would have bothered about Buffett? No. So that also tells you, in Mota Mati, of course, this is a dollar return. But the market he has beaten in last 20 years, he's not beaten, but overall he's beaten by same. So broadly, the big picture has to be 13-15%. I have this book, which I've been telling hundreds of times, which gives data for 100 years for 14 countries, wherever they could find the returns for 100 years. And the equity risk premium, that means a return that the equity guys got over the long bond of the same country, is basically between 5 to 7% kind of range. So there's nothing to project. These are just marketing things, you know. You can change it to, I can make it India at 100 and do this 13-14% for 25 years, and tomorrow it will be some story for 1 hour.
Right. So, long-term equity and asset class delivers around, say, 14-15% return.
Yeah, in rupee terms for India, guys. Yeah.
Right. But despite that, equity is always seen first from the angle of risk and then from the angle of returns. That is to do with, human kind of mindset. But obviously over next 10 years or now onwards, are there any big risks that you see to equities and asset class, which reminds one not to be too greedy, which reminds one not to be kind of, too euphoric on one side? Because at the end of the day, equity as an asset class, is termed to be a riskier asset class.
So the thing is, equity is not risky. Or if you take two things, one is we are talking about market or index. Stocks can be risky. Equity itself as a group doesn't do badly. And there are many stories which we can give, that if you had invested in Japan before World War II started, so that you didn't know that you'll have a bomb thrown at your head or 2 bombs, and still equities of Japan outperform debt of Japan over the next some 10, 12, 15 years. In the beginning, obviously, it fell a lot. And all these, you have the story which is from 1929. If you had bought in October of 1929, when the crisis just started. Or what about in India or US in 2007 December? Now it took years to recover. But first thing is, you are investing at the absolute worst possible, looking at hindsight. And second is, it is assuming that you put everything on that day and then never invested a rupee again. If you had invested after December 2007, 3 times, some random 3 dates in Indian market, sometime in 8, sometime in 9, sometime in 10, your recovery would have been much faster. So in general, for equity, it is agreed that because for US, there is 200 years of data in a book called, I think, in Stocks for the Long Term or something, by Jeremy Siegel, and 100 years ago, I told you. And anyway, we know that broadly these markets end up going back to all-time highs every now and then. So the risk is there in stocks. Of stocks, that is why you're supposed to buy, as I keep saying, 30, 35 stocks and not 10 stocks, or you buy an index, because the whole idea is that the stock market will give 14%. Doesn't mean every stock you hold will give 14%, and some of them will be zero and some may give you 40%. And you don't know so much in advance. But you know that a large number of stocks do well, like 40, 50% of the market does well, simply because if you define well as beating the market, and motamati, half the stocks are going to beat the market, half will be beaten by the market, because that is how you got the market. It's like saying, in theory, half the drivers are above average in driving and half are below average. But every driver you ask whether you're above average, some 80% says they are above average, which is not possible, because the average was an average of these guys. So equity, if you can average, I think the risk becomes even lower. And if you provided have some 3-5 year, plus if you look at today as a starting point, then I would say, because the market itself, let's start with the big picture market, US market has corrected a lot. And let us say that today also there is some confusion whether this inflation reduction is a serious thing, or it is not really big enough for the Fed to change anything. So आप 4 महीने और wait कर लो. But 4-6 months में, in theory, this bear market would be over for them. And for us, we would have passed a year where the foreigners sold a lot. The Indian guys were able to stand up to them. So there is no reason why now when the foreigners come back, which I think automatically they come back, and they will come back. And they have already come back now, but I've been saying it for 1 or 2 months. And actually that I've been saying for 4-6 months. They have to come back, because their normal thing is to come and invest. So when they come, there's no reason why the Indians on day one will back off and say, okay, now you take back your position. And because I'm seeing one question on the side, we are currently in our domestic funds at 99.8% invested, and have been since June end. And in our long short fund, where our average is 60, and in Jan we were 45, now we are at 72, which is one of our highest in a long short fund.
Right. So, your bet would be more towards large caps or mid and small caps from now on.
That's why, because we like these 3 sectors, other than consumer, where you can say small means like a billion type, like have your own Best Life and all, which are like a billion type market cap. Motamati, our market cap become larger because we like financials, we like IT, and we like consumer. It's somewhere large companies hoti hain mostly. So if you look at not the SEBI formula, because we are not under mutual fund yet, so I don't know that. But in our formula, we are 85% large cap. If you just say 5 billion type number. But I think SEBI formula say it become a little lower, I think. The way they define. Because they, I think, call only 100 companies as large cap or something like that. So confusing as well. Till we get dirtier hands once we have a mutual fund. Then I'll exactly understand what unki usme kya hai definition mein.
Referring to one of the reports, last 10 years, India has produced more than 110 new billionaires. More than 110 new billionaires, which are kind of, who have not inherited wealth, but which are kind of, who are not known, and today they are kind of, well-known billionaires. So in this context, what are the businesses or business models every one of us kind of aspires to be in that list over the next 10 years?
Too late.
Now, if you have to guide, anybody entrepreneur or any aspirational entrepreneur, what are the types of businesses that one should aspire, or what business model one should kind of follow over the next 10 years in the context of the possibilities of India's growth to be part of that list?
So first of all, this list is going to expand, because there must be already hundreds of guys who are between 200 million and 1 billion. तो पहले तो वो बनेंगे in theory if they do a good job, or some of them. So if you are starting from zero, to imagine straight away a billion, in this new startups, any guy who started by saying I want to have a unicorn, other than for a few months when everything was like bullish, everybody hates those guys who say that the first thing, Acha ji, we have started a company, we would like to raise some private equity money. And what is your objective? My objective is to have a unicorn. So you're not supposed to, if you're an entrepreneur, because 80% will not reach $1 billion, let's say, is to do something where you believe, A, that you have some angle, and that angle is not available in the market and you have it. But now the question is, you can say, in which industry should you go? So I would think that if I look at these three as the big theme, big picture thing, growth for the whole world, and I'm telling you, there's no fourth sector. Whatever it is, I'll fit it into these three if I have to. Okay, maybe a little bit pharma, sharma might not be, but broadly, everything fits into these three. Is for an individual entrepreneur, I would think, can you open a bank? Very unrealistic. Financials ka bank ki 28% index ud gaya. Now let's say IT company, now what the hell will you do? But you can do some product company, some IT use wali company, but not really. I'll also start a new IT body shopping company. Nobody is bothered about that. Will you open an insurance company? Very unrealistic for a regular entrepreneur to say, I want to start an insurance, but you can sell insurance. So I would think the realistic thing is to do a consumer type company. Because consumer mein, you can start with whatever one area and you say, I'm going to do it only in my area, in my state, and I'm going to start with having 5 locations, or I'm doing fast food, or I'm doing some localization of some food or some product is the easiest. But in the end, if you see, the entrepreneurs who come, in theory, have all started because they had some passion, they had some angle. Very few do it very coldly. For example, the guys who made money in hedge funds is because they were working in some asset management company. Not that randomly one day hedge funds make a lot of money, so let me start a hedge fund. ऐसे नहीं होता. आप सबको देख लो, सबका background देख लो. So your initial period has to be a job. एकदम coldly that you make a list of things that have the highest return. ऐसे मैं ये कर लेता हूँ. You will not be able to do it. First, find your passion. For me, it is 24-hour investing is my passion. अब उसके बाद उसके जो payoffs हो life में वो अच्छे हैं.
So we always, in the last 3 years, say that one of the big risks that equity markets worldwide face today is the rising global debt, because a lot of money has been printed globally, over the last 10 years, and especially during COVID period. So how big is that risk? Can you please comprehend, what is the meaning of that risk and how much to worry about that risk?
Even for me, it's big picture, but it is a risk. Because अगर मैं big picture में बात करूँ, I don't know exactly. I think Japan का सबसे highest है शायद world में, which is debt to GDP. And Japan का पता नहीं exactly, but let's say US ले. So US का, they have increased their balance sheet by whatever, some $8-9 trillion, and whatever was the original. So now, if the interest rate goes up, because they themselves wanted to go up, that on their debt, if they were previously paying 0.5%, and now they have to pay 3%, तो वो 270 billion तो उनकी जेब से straight चला गया every year till that is withdrawn or finished. But how do you finish it? Because you are running new deficit. So these things are a bit complicated, because today if you imagine कि US in the end, by the way, I was reading this guy's book, अपना क्या नाम, उसका नाम ही भूल गया यार. Okay, I've forgotten the name of the guy. The guy who wrote Ray Dalio. So Ray Dalio, in his book, which is called Cycles or something, is saying that normally countries last for about 250 years at the top, and US has been there for 170 odd years. From 1870, it is the biggest country in the world. And he says there are some 8-9 stages of basically going back to zero, and he says they are in stage 6 or 7. And now it has to be a civil war, and ultimately currency has to go. Now, whether that happens in 10 years or 50 years, we don't know. So if you look at he's a very $150 billion hedge fund manager. And in his book, he says that I speak to the biggest minds in the world, for all the hedge fund guys, the Federal Reserve guys, Kissinger, I mean, whoever in the world, and whatever you understand from that. So the point is, if you look at it very long term, it is nearly guaranteed that there will be a problem. But problem है हम day to day वाले लोग हैं, because you are not finishing off your old debt, and the new debt accretion is happening, and with interest rates in the short term are going up, who knows about 20 years, but for right now, that you can't go to a very normal rate, because your monthly or annual interest rate bill will only blow you off. And then if you say, no, I'll keep it for longer, that means that later on the trouble is bigger, because you have to deal with it. So in that sense, India thoda disciplined hai. First is that Indian debt is mostly local. Of course, you can say US debt is also local, because the US debt is in dollar, except that it is held by foreigners. Indian debt is actually local, it is held by a public, and only 20% or so is foreign. But yeah, ye sab cheezein badi big picture hai. It's like saying that what if tomorrow China attacks Taiwan? Then all these stories go away for 5 years, 3 years, a bit complicated, but yes, big picture risk is there.
Right. So coming on to the final questions.
Maybe
So
take some questions from this, whatever I'm seeing on the
yeah,
right.
sure. So I think more or less we have covered.
Acha, okay, whatever. I'm now seeing. Okay, one question is, what is this downside of jobless growth? Jobless growth is a big story, because nowadays as financiers we can say we don't like companies which are hiring people. We say go into a non-linear model. Even to IT companies, people used to say that there is no point in your hiring more and this thing. You should increase productivity. You should increase products. You should take fixed price projects, so that you can increase margins and all that. And actually, this is a big issue, because all the big sectors currently, at least in the short term, in the US, are all saying that we are going to cut or improve productivity and cut jobs. Mark Zuckerberg said at a call that I know that some of you guys will not like the new Meta, new Facebook, and we are okay with that. And then Google guy, apna Pichai, said, sorry, we have too many employees. And these things, because Indian guys don't say. You really believe an Indian corporate will come on TV and say that I am going to fire many employees? वो चुपचाप करेंगे, क्योंकि हर चीज छुपा के करते हैं, क्योंकि सच बोलने में थोड़ा झिझकते हैं. So these things you have to draw from other this thing, and that is a problem, and that is an issue, yes. But it's not so much of an issue for the market, because the market likes these very kind of things, that you are growing with less jobs being given. Please remember, I've been saying it forever, that everything that happens in the world for good is not necessarily good for the market. For example, in India, if we say there is liberalization, and so we are giving 22 bank licenses. Or liberalization, there will be more penetration of banking services, more people will be able to open bank accounts, there will be more bargaining, you will get slightly higher interest rate, but sorry for my market, it's very bad, because suddenly there will be 25 banks instead of 5 banks, and that is not good. If we say that we will open every sector to foreign investors, to Chinese investors to come and make or buy, it is great for cost. You may get things cheaper. But the fellow who set up his capacity and who's been enjoying it for 10 years. So Indian market gave higher returns than others, because our liberalization or reforms were a bit controlled. It is better if the profit of a company has to go from 1 to 20, let's say, that it goes up over 5 years, instead of it goes from 1 to 15, 15 to 20, and then sorry, nothing is left, because everything happened in 2 years. So the fact that we had slow liberalization, according to me, helped the market in looking like a secular story and not like a Russian story. In 1 year you did everything and then half it was stolen, and then after that nobody knows what to do.
Right. So, like, over the last 5 years, we saw specialty chemicals as one sector, which has now come up as a new sector. You have been talking about IT, pharma, financials, consumption, but specialty chemicals, which is part of maybe subset of a manufacturing sector,
Yeah.
has built a lot of wealth. So, if you were to kind of, anticipate any new sector which could come from bottom, what would that be?
Okay, just before that, because I was speaking to you about it, one guy saying कि when can we speak in Hindi? We will do in Hindi one day.
Sure, sure, sure.
Hindi also we should do. अगली बार करेंगे जी हिंदी में.
बिल्कुल,
So the thing is, the new sectors में क्या है? अब like we call the old sectors as new sectors. If you buy some beaten up new age stock, it is still new sector, but you may say that in the private market it's been operating for 7 years and been listed for a year. Or if we buy hotels these days, because we feel that not only there's a COVID opening up, but that there is a cyclical turn, that new hotel supply has not come. But if you say new sector hotel, so फर्स्ट सेंचुरी से चल रहे होंगे kind of thing. So ऐसे इतना न्यू सेक्टर नहीं आता है. China, this China plus one manufacturing could be you can call it a new sector if you so desire to call it that. But basically what we are looking at is a delta in some existing fellows only. If he suddenly viewed that he's competitive with China and he got 2 orders, you may call him a new sector that way. But otherwise, everyday new sectors don't turn up. For example, in between, retail broking companies became very big. Now, was it a new sector? Because in 2090s also I used to invest in retail brokers. And then they came and now they're mostly gone or whatever.
How do you see valuations of Indian equity markets at present?
Broadly okay. So if you look at the 3 things, financials, I don't think anybody can say if they have been massively re-rated. They are broadly in the last 5-10 years grown in line with their earnings, and actually they have reduced. For example, HDFC Bank used to be 3.5 times and it is now 2 point some times price to book. So uski to badi bhi nahi hai. ICICI वगैरह का specific बड़ा है, but not to some wild proportion. State Bank of India now is at 1 point some 2 times. It used to be 0.3 times in 2020, but you can't say. So I don't think the financial sector has been re-rated, correct? Then you look at IT. IT has got re-rated, but little bit derated. And now the only reason why we are not overly buying it with the reinvestment of the cash that we had is just because it looks like at the front of the US issues, and if there is a recession and if there is pressure there, and they are faster to react to discretionary projects. So India will always be important, but wo growth rate ka plus minus ho sakta hai. And you may call them 10-15% if you want, because if they go back another 20%, they've gone back to their older this thing. So the only higher valuation for similar growth, you could say in some sectors of consumer. But in consumer, there are newer things, these, QSRs, hotels, these new companies now, which have all historically के हिसाब से you may call them high or low, but there was no profit for years. So if they come closer to making good money and for a few years, so I don't think overall. And the main thing is, I used to always say, if there are 100 companies in the market and you think that 23 companies are overvalued, chalo chodo 77 hai na. 80 companies are not overvalued out of 100.
What is your view on IT sector in terms of valuations after correction that we have seen over
That's
last?
what I was saying. We are not buying new, but we are not selling whatever. We sold some in Jan Feb because they had gone up a lot. Basically, these L&T twins. And after that, when we bought back, we have not bought back any IT, but still we have some 12-14% in it.
So why IT is considered to be one sector which should continue to perform, as you also mentioned.
That's what I was saying. The thing is that today, what was the problem? The problem today means till even now was that the US market has too much, pressure from higher interest rates coming and expected. And the whole issue is whether the US will go into recession or not, and whether the US market will do well or not. Usi se sara chala hai. So the US ka biggest interface with India is IT. Now, if those companies which are very sensitive to meeting analyst target and meeting their EPS number and all that, there has to be some toning down of whatever small things they can save. Doesn't mean forever, but for now. And so every morning, why should we worry that some customer of our company there has got hit by his results and therefore they are firing 20 people or 20% of the people? What is the need? Right now, I think the default first is financials and consumer. There's no need. I mean, we have to rotate within these three only things, broadly speaking.
So one of the consumer companies, in financial services sector, which is all of us know, Bajaj Finance has done really well with a 55% kind of a CAGR return over last 10 years. There are a lot of other, similar examples, but none comes closer to 55%. What are your, takes? Now, obviously, there are more people who are participating in equity markets.
So I have made 70x on Bajaj Finance, but now I cannot comment on it because I don't like it. And you're not supposed to talk about stocks you don't like. You're supposed to talk about stocks you like. But it is too big for India. It cannot grow at that rate. And in a few years, it will become like HDFC Bank because it is growing on the same things which we are unhappy with HDFC Bank for, which is that it merged with HDFC. Therefore, it will get mortgage loans, which are very low margin loans. So if you're going to do mortgage loans, if you're going to do this microfinance loans, if you're going to do SME, that's like a bank. Bank जरा 2 price to book पे चलता है, कोई भी बैंक. आपको 7 price to book मिला, आप सारे consumer loan करो. Consumer loan आप करते हो 40% of the 45% of the book. So when you are doing those kind of things, and एक और बात है that people say that people cannot get, will not sell a stock because everybody in the market loves it. So I say exhibit A, HDFC Bank. Everybody loved it 3 years ago, and boom. In 3 years, not one guy wants to buy it. We still have it at our top holding. But the point is that if you see price to book, if you say today no, so okay, 3 years later it will become like HDFC Bank is today. Okay, 5 years later it will become like HDFC Bank is today. Then in the end, it has to trade at 2.5 times. If today HDFC Bank is trading at that time, or even ICICI Bank, so farak kya reh gaya? Because you are growing at 30 and 40%. Now you say that you'll get 30, 40%, we back off. But if you, in the end, we know, come what may, a consumer durable finance kar rahe ho, so it can't be higher than consumer durable unless you say more and more people are getting financing, which now people are not saying. But even if they are, there are 60 new financiers now. Whether they lose money or make money, they're all there to finance these things.
So it has been really pleasure conversing with you, Samir. I think, this has been another insightful conversation. We will surely do the next session in Hindi. And once again, wishing everyone a very happy Independence Day. We have been doing all these sessions, but I can tell you every session we conclude with a bullish note that 14% is a kind of a standard, equities in asset class.
Actually, we don't end. That is the actual number.
Which
Mati speaking, as we say in Hindi.
Absolutely, which we expect, in long term. But obviously, long term means 10 years as a minimum time horizon that you keep in mind. Obviously,
it happens every now and then, and that is for the index.
Right. And obviously, within that, some of the fund managers like Samir have always tried to outperform the index and give an alpha. And if you kind of, want to make returns closer to the index of around, say, 14%, then stick to index funds. But if you want to make alpha, then come to portfolio management services or alternative investment funds. And we, as a platform, PMSAIF World, deep dive these products in depth. And we do quality, risk, and consistency analysis. And we have understanding, not only about the performance, but about the people, philosophy, portfolio, and a lot of other factors which are important for one to understand and do well-informed investing. With these words, I kind of thank you all for joining us today for this knowledge session, and thank you everyone.
Thanks. Bye bye.